Let's go over the latest weekly flow data from two institutions. Number one, we have Goldman Sachs. Number two, we have Bank of America. Now, let's first go over the Goldman Sachs data. It's their prime book trading flow for U.S. equities, representing their institutional client. Most of them are hedge funds, okay? And the blue color is long flow, red is short, black is net flow. And for the past week, we actually see an increase in the net flow, and it's a big increase because their hedge fund net bought U.S. equity for 2 consecutive weeks. Okay, it's the second week of net buying, and it's the largest net buying since December of 2023. In other words, year to date, last week is the largest net buying for U.S. equity for their hedge funds. Okay, and macro products made up over 70% of the net buying. So that's the blue stuff over here. And the black stuff, the single stocks, made up of the other 30% net buying. Okay, so in terms of macro product, the net buying is plus 1.2 standard deviations. So it's the highest surge for the macro product, the highest surge since June of 2023. The single stock buying for the week or last week is it's actually the third straight week of the single stock buying. It's plus 0.7 standard deviation. For the single stock trading last week, we can see that it's the net bought was led by financials, utilities, industrials, and information technologies. And the most net sold sectors were energy, communication services, real estate, and materials. Last week, the financial sector were heavily net bought for the third week. And in terms of standard deviation, it's a plus 2.1 standard deviation. It's a super big buying surge, the fastest buying pace since the February of 2021. It's actually the 99th percentile for the past 5 years. So one of the largest for sure. And the financial stocks has been net bought for 8 consecutive sessions. So each session is a trading day. So been net bought for the past 8 trading days, indicating a sustained interest among the hedge fund for that sector. Okay, and pretty much the hedge fund is showing their bullishness, the bullish sentiment, and this sentiment is driven by the strong third quarter earnings report in the financial sector. In terms of U.S. information technology sectors, aka the tech stocks, the hedge fund, they net bought the U.S. tech sector for the third consecutive week at the fastest pace in 5 months, okay, driven by both the short covers and long buys. And this chart shows you the technology sector percentage of overall U.S. net exposure. Okay, so for hedge funds, your total U.S., within the total U.S. exposures, what's the percentage of the tech sector? And the percentage is shown in this chart. As we can see, there is a little bit of a reversal over here. And nearly all subsectors within the U.S. tech, except software, okay, more leaning towards AI. So except the software sector, were net bought for the first time in 3 weeks, okay, the notional leader were semis and semi equipment, okay, and tech hardware and communication equipment. Information technology now account for 16.1% of the overall U.S. net exposure, as seen in this chart over here. It's up from 14.3% a month ago. Okay, so this is telling us that the hedge fund sentiment improved for the U.S. tech sector. In terms of regional flows, okay, last week we saw that North America over here is mostly made up of U.S. stocks, and some are, and the rest are Canadian stocks. North America is the best in terms of trading flow for last week. Okay, it's plus. In terms of long buying, it's a positive 1.39 standard deviations. And in terms of the short covering is 0.56 standard deviation. The worst performing region is Asia ex Japan, mostly made up of China. And it's the worst performing region because if you look at the short is actually minus 2.38 standard deviation for shorting. That is very bad. Now let's look at some flow data from a different institution, Bank of America, Global Research. Okay, and their flow data is at the fund level. They're representing the public funds instead of hedge funds that are closed-ended funds. So the public funds are like ETFs and long-only funds, aka the mutual funds, where everybody, retail investors, can get access to it. So this one not only represent the smart money, also represent the dumb money. Okay, it's an overall picture at the fund level. According to Bank of America flow data, we can see that they're observing last week the largest outflow from the tech sector since June of 2024. It's a significant $1.3 billion outflow from the tech funds. Okay, but again, this one is not U.S. only. This one represents the global funds, but U.S. funds are the largest. U.S. have the largest tech stock in the tech sector, so this is somewhat representative of the U.S. picture as well. Okay, so it's kind of different, right? Like I said, in the hedge fund flow from Goldman Sachs, the hedge fund has been buying U.S. tech sector and U.S. stocks, but over here on a global fund level, it's actually a selling going on. Okay, it's a selling picture, a significant selling for the technology sector. It's very different. And last week, we can see that at fund level, the Chinese equity saw the biggest outflow since July 15th. And it's minus $4.1 billion. Okay, and it's kind of in line with the hedge funds because on the hedge fund regional flow, I showed you that Asia ex Japan was one of the worst most net sold region last week. So as a conclusion, overall, hedge funds has been making their biggest U.S. stock purchase or net flow since December of 2023. And also they have been buying heavily into the US tech sectors. It's the largest weekly purchase in the past 5 months. But in contrast, in the public funds, we're seeing there's a big outflow in the tech ETF. So there's a bit of a contrast over here. I think people need to take note of. And both hedge fund and public funds are pulling money out of Chinese market. That's in line with each other. Thank you very much. Don't forget to like and subscribe.